Hey everyone, welcome back to Corporate Dakota. Ready to unravel some corporate secrets? Today we're diving deep into a filing from ClimateRock. And trust me, this one's a roller coaster. Hold on to your hats because you might be surprised by some of the things we find. The clock is ticking for ClimateRock. They need to get this merger done quickly or it's game over and time to liquidate. That's a lot of pressure. Mark your calendars, folks. ClimateRock is holding a crucial meeting in 2025 where shareholders get to vote on whether to approve this deal or not. It's a make or break moment. But here's the catch. They can only complete this business combination or deal if shareholders give the thumbs up on two key proposals at the meeting. If either of the proposals gets rejected, the whole deal could fall apart. To try and ensure the deal goes through, ClimateRock has wrangled some support from key players, including their sponsor and certain shareholders of GreenRock who are all on board to vote in favor of the agreement. But will it be enough? In a last-ditch effort, there is also a proposal in place to adjourn the meeting and vote to a later date if necessary, giving them more time to rally support and convince any reluctant shareholders to get on board. Smart move or a sign of desperation, you decide. Public shareholders have a big decision to make. They can redeem their shares for cash, snagging around 11 per share. That's right, exchange those shares for cold, hard cash. If a shareholder tries to redeem more than 15% of the public shares without ClimateRock's okay, they will simply not be redeemed for cash. So play nice and follow the rules. ClimateRock is also facing a delisting from Nasdaq because they don't have enough public shareholders. And Nasdaq requires that we complete a business combination no later than 36 months after our initial public offering. If they don't act fast, they will face suspension and delisting. ClimateRock's board is urging shareholders to give a thumbs up to the business combination proposal. This merger and all the transactions that go along with it need to be approved at the meeting. The company's initial shareholders, including officers and directors, would receive ownership of Pubco Class A ordinary shares and Pubco Class B ordinary shares, which they would not receive absent completion of a business combination. So officers of ClimateRock have an economic incentive to pursue and consummate an initial business combination, even if that business combination were with a target company or on terms less favorable to public shareholders than liquidation. It gets even more interesting. We are starting to see the same names pop up everywhere. Charles Rattolband V is the indirect owner of the company selling wind assets. We have the CEO of ClimateRock as a director of GreenRock and sole indirect owner of another fund being acquired. There are more conflicts of interest all over this deal. Messrs. Regnarsson and Rattolband are expected to receive significant shares of Pubco 15.9% and 43.9% respectively, assuming no redemptions of public shareholders. Looks like this business combination would benefit ClimateRock's initial shareholders to recoup their investment and make a substantial profit, even if Pubco Class A ordinary shares lose significant value. When thinking about the approval of this business combination by the board, it's important to keep in mind that its directors, officers, and major shareholders have interests in such proposals that are different from or in addition to your interests. Remember that management team have an economic incentive to pursue and consummate an initial business combination, even if that business combination were with a target company or on terms less favorable to public shareholders than liquidation. If Gluon's efforts lead to PIPE funding of either debt or equity, Gluon will be entitled to receive a fee. So ClimateRock's management team have an economic incentive to pursue and consummate an initial business combination, even if that business combination were with a target company or on terms less favorable to public shareholders than liquidation. The company has issued a promissory note, the extension note in the aggregate principal amount of up to $900,000 to the sponsor, pursuant to which the sponsor agreed to provide ClimateRock has deposited into the trust account until ClimateRock completes its initial business combination. As of February 28, 2025, ClimateRock has deposited into the trust account until ClimateRock had composited its initial business combination. As of February 28, 2025, ClimateRock has deposited into the trust account $1.4 million. Let's dive into some numbers. WinShare Fund. One of GreenRock's key holdings presents a mixed financial picture. Trepid, their revenue was 1,004 and had net loss of €1,530 and 149. ClimateRock's initial shareholders can earn a positive rate of return on their overall investment, even if public shareholders experience a negative one, because they purchased founder shares for $25,000 or approximately $0 out on TARS per share. So what's the takeaway? On one hand, the clock is ticking and ClimateRock need to close this deal before May 2nd. To avoid a delisting, it seems that ClimateRock's initial shareholders, including certain directors and officers of ClimateRock, have more to gain than public shareholders to pursue and consummate an initial business combination. Even if that business combination were with a target company or on terms less favorable to public shareholders than liquidation. But it's up to the shareholders to make the final call. What will they decide? Guess we will find out in 2025. That's all for today's Corporate Decoder. Be sure to subscribe to find out what happens with ClimateRock and hit the like button if you enjoy the show.